everyone. Uh, Welcome to this extra special session from ITI Mutual Fund. My name is Mayuk Datta, and it's my pleasure to welcome all of you onto this call. Uh, we are here to talk about our new product, which we are launching from today onwards. This is the ITI Large and Mid Cap Fund, and we are very excited to bring a new product after quite some time for our partners and investors and for everybody alike. And today to talk about these products, this product we have with us are fund managers who will talk about this product. So it's my pleasure and honor to welcome two of our fund managers who will be managing this fund to talk about markets, their views, and how they look at this product as we launch this today. So welcome Vishal and welcome Rohan to the call. I'll introduce our speakers today. Mr. Vishal Jaju is our fund manager. He has been associated with ITA Asset Management from January 2023. He has more than 17 years of experience in capital markets, and his previous stint before joining ITI Asset Management was with Tata Investments. He's a chartered accountant by qualification. He has done his PGDM in finance and is also an MBA by qualification. Extremely passionate about equity research and bottoms up stock picking is his forte. He's currently managing the ITI Tax Saver Fund and is also the co-fund manager in ITI Large Cap and ITI Balance Advantage Fund. So welcome, Vishal. Uh, our
Thanks.
next speaker for today is Mr. Rohan Kode. Rohan has been with ITA Asset Management for more than 5 years now, and he has more than 18 years of experience in the capital markets. His focus has always been on fundamental research across investment ideas, sectors, and he has worked with institutions like Bank of Baroda, Capital Markets, Prabhudas, Leeladhar, and Anand Rathi earlier. We- uh, Rohan holds his a qualification in Masters in Management Studies from Mumbai University, and he's a graduate from R.A. Poddar Commerce College in Mumbai. And he's currently the fund manager for the ITI Mid Cap Fund, ITI Value, and Pharma Fund. And he's also the co-fund manager for our ITI Multi Cap, Flexi Cap, Small Cap, and Focused Equity and Banking Financial Services. So welcome, Rohan. And to both of you, thank you for taking out time to be with us for this session. So I'll straight away jump into the questions which we have for today, which are, I'm sure our audience will be looking forward to hear from you. So my first question is to you, Vishal. If you could tell our viewers, what is your view about the equity category of large and mid cap? And what do you think it is the benefits which makes it is unique for investors to consider this category?
Yeah, good evening, everybody. So, the large and mid cap fund would predominantly invest in a combination of large cap stocks and would have allocation of minimum 35% in large cap category, minimum 35% in mid cap category. And when we talk of the industry size, the size of the industry is about 2.5 lakh crore. And this particular category constitutes overall 9% of the industry equity AUM. When we look at this category, the top 100 companies, which in a way constitute the large cap shares, and the 101 to 250th company, which constitute the mid cap shares, form the universe. By having this kind of an addressable market, we would be addressing 82% of the overall market cap.
Great. Thank you, Vishal, for that introductory part. Rohan, my next question is to you. Could you elaborate why investors should consider putting money into such a category Vishal talked about?
Certainly, Mayuk, and hello everyone. So, one key reason to invest in the ITI Large and Mid Cap Fund is the potential for growth. As you know, we'll be investing in mid caps and large caps. Now, the mid caps provide agility; they grow faster, they have an upgrade potential into large caps, and therefore get more representation in indexes. At the same time, large caps provide the strength. They are less volatile, they have more predictable earnings, and there is more robust ownership over there. So the large and mid cap index, which is derived from large caps and mid cap companies, 50-50 each, it has a distinct difference in sector allocations. There are almost 8 sectors where the index allocation is different from the large cap index and the mid cap index 150 index by 2% or more. So this kind of potential is there in terms of investors to achieve both growth as well as get a stability in the portfolio as well.
Sure.
Back to you, Mayur.
Thank you, Rohan. Vishal, my next question is to you, and that is what people who are watching the program will be very interested in. Looking at the current markets, domestic and international events, and the data which are coming and our current market valuations, why do you think is currently a good time for investors to consider a large and mid-cap fund?
So today, when we look at corporate profit as a percentage of overall GDP, we are just on threshold of breaching the 5% mark. Historically, we had seen this scenario only in the year 2008. However, we all know what followed after that, whether problems globally overseas in the form of subprime crisis, and then the problems happened in India 2011 to 14. Today we have a government which has the political will. In 2011, as a country, we were ranked 11 in terms of the GDP, and today as we speak we are ranked 5 in terms of our size of GDP, with a commitment that we will be moving to towards rank 3. Next slide, please. When we talk of corporate debt as a percentage of GDP, the corporate debt in 2014 used to be 70%. Today that has come down to overall 55%. So there has been a substantial deleveraging that has happened as far as corporate debt goes. Similarly, one more parameter that we evaluate continuously is the government capex as a percentage of overall budget expense. So the government capex, which used to stand at about 1.9 lakh crore in financial year 14-15, went up to more than 9 lakh crore in financial year 23-24, a multifold increase. And this year's budget has allocated a sum of more than 11 lakh crore for financial year 24-25, a substantial increase which will propel the consumption as well as infrastructure boom in the economy. And final point, when we look at continuity in policy, the measures that the government is taking, the focus on consumption-led growth. So overall, to sum it up, it continues to be an interesting scenario to invest in the markets. While over the last 4 years, the market post-COVID has gone up, but it continues to remain as a journey and not a destination.
Great. So thank you, Vishal, for that. My next question to you, Rohan, is about our product launch. So in the ITI large and mid-cap space, what would be the portfolio creation process as per your understanding, and how would you approach it?
So our strategy for this fund would involve focusing on companies which have strong fundamentals and resilient business models, so that these companies can thrive even in uncertain times. Now, if you look at the investment universe for the fund, it can be 500 plus. This will be split between 250 top companies as per the immediate mandate of the scheme. The other 250 plus companies are investment ideas beyond the mandated 250, which complement the core investment of this scheme. There will be filters which will apply, which will be based upon bottom-up, based on financials, which can ascertain the growth and quality of the business. We'll also apply measures like how the past track record has been, especially in the past 5 years, and what kind of return ratios has the company generated versus the sector, and what is the prospective growth rate for the future. Now, based on these filters, the fund manager, with the help of the analyst, would create a list of convincing ideas. And thereon, further filters based upon valuation, sector analysis, management quality and management depth, competition, regulatory issues, overall macroeconomic environment, these would also be applied. And then the final fund construction will be determined by the regulatory criteria, which you already mentioned is 35% for minimum 35% for mid cap and large cap. And of course, we'll also take into account the internal risk parameters that we have set for the stock and sector level, including concentration level of any particular sector or stock in the portfolio. Here, we would be following the internal risk parameters of our stock and sectors limits, as well as the range of stocks that we can have in the portfolio.
Great.
Another factor to consider over here is that while creating the portfolio, we'll be classifying the companies in 3 categories. The first category will be the stable segment, which will have 30 to 40% allocation. This segment will consist of steady businesses with an investment horizon of nearly 3 years, 3 to 4 years. The second segment will be the agile segment, which will also have 30 to 40% allocation. And over here, we would have businesses with visible growth path and investment horizon of 18 to 24 months. The third segment would be the emerging themes. Over here, we would have 20 to 30% allocation, and this would comprise of new age businesses with an investment horizon of more than 5 years.
Great.
Back to you, Mayur.
Thank you, Rohan, for that elaborate explanation. My next question is to Vishal, where people would be really interested to know what is your uh, criteria for selecting businesses for this portfolio. Could you elaborate about your business selection process?
Yeah, so we have set up various criteria in selection of a business. The first one being the sector and the business. What are the tailwinds the sector is facing? And in that particular sector, where is the company headed? How is it positioned as compared to other players? Can it gain market share in a scenario when the sector is doing well? Second is the phase of the business, whether it is the phase of the business, whether the company can benefit out of the scenario that is emerging as to which phase it is doing, whether the sector has undergone some sort of consolidation, whether the competitiveness in the sector is coming down. The third is financials. Financials are actually the real barometer of analyzing any of the companies. These financials would be analyzed on all metrics like sales growth, net profit growth, return on equity, return on capital employed, the debt equity ratio, promoter holding, and so on. Fourth is the management, which is where the qualitative aspect of any of the companies would come out. I mean, one management can really change the fortunes of the company, whereas a wrong management in the same company or the same business can create some problem if they don't manage it wisely. How law abiding is the management? How are the corporate governance practices would be our key criteria. Has the management walked the talk, whatever they said in the annual reports of previous years? How have they fared on the commentaries that they've given in various recent conference calls? That would help us in analyzing the quality of management. Fifth is the valuation. As a fund house, we focus on the GARP philosophy, that growth at a reasonable price. We don't believe in paying expensive valuations for any of these businesses. The final is the assessment of the businesses, which would be basis the bottom-up approach, because the sector selection would be a top-down approach, but in that particular sector, the selection of the script would be a purely bottom-up approach basis the internal discussion and debates which the fund managers have on regular basis along with our internal research team. Over to you, Mayuk.
Thank you, Vishal, for explaining your business selection process. Before we have some couple of questions on our social media handles. Before I start taking it, I would like both of you to talk about what is the essence which you think will be which investors and partners should take away from you when it comes to looking at this product from ITI here onwards. So first Rohan and then followed by Vishal.
Yeah, so what I would like to say is that ITI Mutual Fund has a very strong track record of performance and a reputation of managing funds with integrity and expertise. Our investment philosophy is rooted in rigorous research, and that was highlighted by Vishal, as well as how we'll approach the large and mid cap fund as well. The same rigorous research and commitment will also be applied for this scheme in order to create value for our investors. We have also a very disciplined approach to managing risk, and this is what will set us apart and what will give investors confidence in choosing offerings from our fund house. Vishal, if you can add anything.
I think, Rohan, you have covered most of the points, but I would like to categorically mention about the recency effect factor in the stock market, that today, as a category, the rationality tells us that large cap as a category offers the best risk adjusted return in particular. And if you see that effective combination of large and mid would be the right factor, that large cap would give you stability, mid cap would give you growth over the mid to long term, and therefore this is the right product at this juncture that we would like to specifically highlight upon.
Sure. So we have
we're very excited about the potential of the large and mid cap fund, and we are confident that it will meet the investment goals of many of our clients. So we hope that investing now will allow investors to position themselves ahead of potential market recoveries and capitalize on growth opportunities that can arise from market fluctuations. Yeah, over to you, Mayuk.
Okay, thank you, both of you. I have some questions which have been there on the social media handles, so I'll pick up some of them and make a gist and probably have your quick response to that. The first obvious question which comes is, what is ITI's current equity market outlook? How do you look at current market valuations, volatility? So probably Vishal, if you could take that.
We have seen some amount of valuation thing in, if I split it into three categories: the large cap category as compared to the 5-year average, wherein the risk reward ratio is the most compelling at this juncture. Then it comes to mid cap, and then the small cap index. So today, when we talk of, I guess this the movement that has happened in terms of Sensex, it is a journey. It is not the destination. While, as I highlighted, that corporate profit as a percentage of GDP has been at one of the highest levels, we expect that this kind of trend is expected to continue for in future. The kind of events that are unfolding globally, because now the question is, when will the Fed is going to cut the rate? It is not a question whether the rate cut will happen or not. In such a scenario, how the flows will move to emerging markets, including India. In as far as the domestic market goes, we are done away with the union budget, we are done away with the elections, we have the same government for the third term. Overall, the monsoons have been good this year, and the result season that has just recently ended, wherein there are managements which are commenting about green shoots emerging in the rural economy. So an effective combination is that there are pockets of value, there are segments which are reporting growth, and overall India continues to be the growth story, and therefore we expect that this kind of a movement is expected to continue in the medium to long term.
Great. Rohan, if you could also touch upon, as you being the mid-cap fund manager, you could also talk about your view on valuations and markets at this point of time.
I think three things we have to look out for. For India, I think what is working is, firstly, GDP growth is expected to be very strong. With strong GDP growth, corporate earnings growth should also be very robust. And so long as corporate profitability growth is strong, valuations will continue to remain elevated as compared to the historical averages. Secondly, there is consistent domestic investment, net inflows from domestic institutional investors in Indian equities. I think they were to the tune of more than 23,000 crores in July 24. So that inflow continues to be strong. Thirdly, Vishal touched upon the government continuity. So that also means that there will be continuity in government policies. So ongoing government initiatives, including increased capital expenditure on structural reforms, on infrastructure development, on Make in India, all of this will continue. So there'll continue to be opportunities for bottom-up investors to invest in attractive opportunities, both in the mid-cap and small-cap space, but also in the large-cap space. There'll also be a continuous churn of companies, with mid-cap companies becoming large caps, and large-cap companies, small-cap companies becoming mid-caps. So the opportunity will continue to exist for active fund managers like ourselves. And we believe that this is a structural long-term growth story in India, which will continue. And therefore, regardless of near-term hiccups, the long-term outlook for Indian equities and even for mid caps is very positive.
Sure. Thank you so much for that views. Can you also, the next question is, are there any themes or sectors which you would be looking forward in this product, or overall as an AMC, or any other things or themes which you are slightly underweight on? So how would you position your portfolio at this point of time? Vishal, if you can take it, and maybe then Rohan can add in something on that.
While the domestic driven sectors, whether it is defense, manufacturing, formalization of economy, banking, financial services, those would continue to be a part of portfolio. We would also invest in sectors which are dependent on exports, which have suffered because of global slowdown. But there are bright chances that if you invest in these stocks in the near term, the benefits would accrue to you in the medium to long term. These sectors would be IT sector, chemicals, and pharmaceutical sector. So effective blend would be a combination of all of these sectors. However, we would like to specifically highlight the fact that sector selection would be a top-down approach, but in the same sector, we have observed that there are divergent trends emerging, and therefore, bottoms-up selection is something that has paid us off very well. It's an effective combination of process-driven approach that has paid us off, and that's why we are seeing majority of our funds being in quartile 1. The same playbook we would be applying to our large and mid-cap fund as well.
Right. Rohan, your views on this?
No, I think Vishal captured it quite well, so I don't think I need to add anything over there.
Sure, thanks. So one question is there that which for a large and mid product, there is, as you said, there is minimum 35% in large and 35% in mid at all points of time. We have a question that what could be a ballpark allocation which people could expect from the ITI large and mid, between large, mid, and what could be the other allocation beyond these two market caps?
In the initial phase, we will go with the benchmarks being set, minimum 35 large, minimum 35 mid cap, and balance 30% would be a combination of stocks which have actually delivered good set of numbers. We are just done away with the result season, and some of these stocks feature in our portfolio in our other schemes, and irrespective of market cap, as long as these companies offer an effective potential to generate alpha, we would be investing in them.
Great. So thank you so much, Vishal, for that. And Rohan, that was our last question. So thank you to both of you for taking out time during your schedule of the day. As we are launching the fund, we have been busy a lot the whole day. So thank you so much for taking out time and answering these questions and being a part of the launch call. And thank you, audience, for taking out time. I hope you have got a great in-depth sense of what ITI Large and Mid Cap Fund is all about. And the NFO starts from 21st August. It closes on 4th of September. We are available on our website, across channels, everywhere. And our sales teams and branches are very well there to be able to answer any further questions you may have about this product or any of our existing schemes. Thank you so much for your time. Thank you for your support and for your faith in ITI Mutual Fund. We look forward to this continuous association in the future also. Thank you and have a great day ahead.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.